Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny, Bert, Dividend Diplomats. And we are recording this on January 4th. It has been 2 trading days, right, Lanny? Or is it 3 trading days in 2024?
We're on 3 trading days here.
Jeez. 3 trading days, and we have already have our first dividend cut of 2024. In this video, we're going to talk about the company. You probably know who they are. That company / their dividend, 48% right now.
Before we dive in, smash that subscribe button. Give Bert and Lanny a nice thumbs up, guys. We had a lightning bolt of a dividend cut that occurred this morning. Many expected it. Many were hopeful that it wouldn't come. And many were caught holding the bag. You might have 2 of us holding that bag.
Yeah, let's just jump right in. We're talking Walgreens, ticker symbol WBA. We covered them a couple weeks ago where I was talking about what the heck am I doing with the position. I was already on the fence with on the fence with selling versus holding and waiting to see what's happening. Ultimately, I decided to wait it out, see what was coming in this January 4th earnings release. And man, was it a doozy. A lot of the comments in that video talked about how everyone was expecting a dividend cut. And I had already accepted the fact that a dividend cut was probably coming. I just didn't expect that dividend cut to come right now. I was expecting another quarter or two for the dividend cut to flow its way through, which is why I didn't sell it right away.
And here we are. Walgreens dropped and only down 7% today. Cut the dividend from 48 cents to 25 cents, almost quote unquote having it. But the earnings release for discussion was positive outside of that darn dividend cut.
The earnings were great. Seriously though, sales growth, revenue growth, 10% year over year. They crushed the earnings estimates. I mean, the revenue estimates by 1.6 billion. Strong international growth, strong U.S. farm growth. They had less of a loss this year compared to last year. So their loss was just barely, they were almost flat. It was only down 39 million. Adjusted earnings per share just slipped a little bit. But overall, though, the actual earnings release was not bad. Then you factor in the dividend cut, and it was a catastrophe.
The shareholder punishment, decline in share price, and a cut to the dividend. They did reaffirm their adjusted EPS range of 320 to 350. They're trying to invest that free cash flow, that extra cash flow from the dividend now into really, it sounds like their stores, their pharmacy stores in the best niche areas that they can. Is that what the vibe you got from it?
Yeah, and that's what I gathered. And we'll put some of the quotes up here. We're not going to read them word for word. We'll kind of paraphrase them. They cut the dividend to strengthen their balance sheet and their long-term cash flow. Of course, that would be the primary objective, you would hope, right? To make their balance sheet better, free up the capital to invest in those stores, and then at the same time we will continue to deliver a competitive dividend yield as the board and management team, continue to view the dividend as a critical component to overall attractiveness of WBA and the other shareholders.
Yep. So here we are, 31.25% payout ratio. Now, when you look at the metrics, PE still below 8.
Yeah.
Yields above 4% at 4.12. And if you didn't catch our dogs of the Dow, this was the worst performing dog of the Dow, which they're threatened to say sayonara to the Dow.
We ever had that's true. As I say, has there ever been a 2-peat or a 3-peat champion of the Dogs of the Dow, I should say, because Walgreens is probably pushing for it.
I'm sure they're trying to grab that title belt. They're trying to see how long they can reign the champion right there, not to get confused with Roman Reigns.
Yeah, but I mean, in all seriousness, dropping 6.8%. What this honestly tells me is what everybody in our comment section has told us, what we knew deep down inside, that the dividend cut's already been priced into Walgreens. That has already factored when the company's been down over 30% over the last 52 weeks. Why? Because they only fell 7%. From that standpoint, typically when the company, you see the big drop in the dividend, if it wasn't telegraphed earlier, it's a beating the day the dividend cuts announced. I remember Intel was just what 20% the day it happened. AT&T just got pummeled. Walgreens just took a few body shots, but it wasn't a knockout blow because it was already they've lost the first 14 rounds of the boxing fight. Getting a few more in 15 is not going to knock them out.
Wasn't a knockout blow, and actually the metrics I'm seeing, it says it's down only 5% today, Bert.
Oh, all right. Well, down 5%. So my bad, everybody. I'll take a my bad on that one. Live fact check.
Um,
So
um,
regardless, whether it was 5%, 7%, my answer is still the same. It clearly is factored in. So the $1 million question here is, what are we doing with Walgreens, right? That's the $1 million question. I said I own about 80 shares. Lanny pretended like he owned less than that, and then realized halfway through our last video he actually owned more than that. So it was over 120. So my dividend cut was cut probably somewhere between $70 and $80. Yours was more with that, probably closer to 100, right?
yep.
Yay.
Yeah, to make that up is going to take some effort, guys. I think a good takeaway here is pay attention to adjusted earnings per share. Adjusted, keyword, bold, underline. Why do you have to adjust earnings all the time to, take back a bunch of expenses? So just keep that in mind. It's one thing that kind of reiterates in a lot of these. I think Intel was very much similar. Somebody could correct me if I'm wrong, but they always had adjusted positive, I think, after all impairment charges or other charges. One big takeaway I think is that. The other thing is, because we use that analysis, I think that's a big takeaway.
Yeah.
Um,
Yeah.
you know,
Yeah, and I think pay attention to what's happening in the market, even when you're driving by too. I think I was joking around that all the Walgreens by me are always empty. Like I never see long lines at the Walgreens by me. That shouldn't be the primary factor in there, but it means something in the analysis.
once every 2 months we do a pickup order at Walgreens of some basic home necessities. They're always good for that. Yeah, interesting. Again, I'm still with you, bro. I'm still evaluating kind of what's the most optimal now that we're in 2024
Yeah.
and we're in some deeper losses. There's some gains to offset. The yield is at 4%, so you kind of already lost income, and now it's like, okay, now you can do an even replacement almost with like an SCHD ETF.
Right. And that's what makes it interesting here is it makes that decision easier, right? When it's at 7%, you're thinking in your head, you're forecasting, you have 6 months of a yield at 7%. Maybe I can collect a couple dividends, see if something turns around and there's a better point that I can sell out of. That decision's gone. It's only yielding 4% right now. So there are a lot more options at your disposal to just move it out and move it into something that you like better.
Yeah.
So
what are you guys thinking? What are you guys going to do with Walgreens? Not to make this a Debbie Downer video, but just, again,
I mean,
we're all in this together. So let's hear it from the community.
kind of has to be. What are we gonna like? There's
Pay attention to tomorrow's video if you're watching this, guys, because, I think we'll kind of have a full circle on investing and, kind of some great takeaways that this owning these types of stocks kind of, not to say reaffirms, but reassures some other components to investing.
yeah.
But yeah, let us know in the comments what you guys are doing in the feedback.
Every dividend cut's a lesson. There's always a lesson to be buried in there. The key is making sure you extract it and you grow as an investor. And this is another example of it. And it's not cheap sometimes, but we'll be better leaving it. So
Not cheap, and you never want to have any of them.
yeah,
You know,
well,
I've only had, in the last 7, 8 years, 2 years with zero cuts. There's always somehow one out of the 60 plus positions that I own that has a cut. So this one, let's hope, is the only one in 2024.
yeah, you're not perfect with investing. No one's perfect. That's also important to remember. So let us know what you guys think about Walgreens. Had you sold out? Did you receive the dividend cut as well? What are you doing with your shares? Leave that down that area in the comment section below.
Guys, we appreciate the support. And as Bert wants to say, he's got one more quote to throw at you.
Oh, if you're not with Walgreens, you're against Walgreens, everybody.
Guys, that was Bert the Hurt and Lanny from the DD, over and out.